Hey there guys, thanks for tuning in. You're here with Bo, Cryptocurrency Australia, and today we have a really interesting one for you. We've just had a recent study done, Bitcoin causing carbon dioxide emissions comparable to Las Vegas or Hamburg. In a nutshell, the Bitcoin network is far greener than what anyone thought, and that's free market mechanisms at play by incentivizing miners to get the cheapest electricity possible. So we're going to dive right into this one today. We've got a couple of other articles to share with you to support how green Bitcoin mining is actually become. So it's going to be a really interesting one, guys. Stick around and let's get into the video. So guys, welcome back, and today you are here with me, Bo Stoner from Cryptocurrency Australia, and the video that we're covering is Bitcoin causing carbon dioxide emissions comparable to Las Vegas or Hamburg. So essentially, a university called the Technical University of Munich has done one of the most complex studies ever done on Bitcoin, showing that essentially it's far greener than what all these media companies and all these news outlets constantly hop on about how destructive Bitcoin is to the environment. But guys, just before we get into that, I ask that you please welcome my new sponsor, Independent Reserve. Are you searching for a world-class crypto exchange with super low fees, professional standing, a wide array of tools, and world-class customer service? Then look no further, because Independent Reserve is leading the way in Australia and has been doing so since 2013. Currently offering Bitcoin, Ethereum, Litecoin, Ripple, and 9 other major coins, Independent Reserve are always looking to add more. But what really sets this exchange apart is their suite of additional products and services appealing to both retail and institutional clients. The first major feature is optional premium accounts, which, depending on the level chosen, includes trading fee reductions, insurance, and world-class premium priority support. Independent Reserve has built a market-leading offering with its OTC and SMSF features and currently has over 8,000 SMSF accounts registered. Things like designated SMSF account types, strong corporate governance, leading reporting statements, and read-only API integration make Independent Reserve a leader in its SMSF offering. In addition, Independent Reserve also offers an automated tax tool built by leading consultancy KPMG, giving a simple solution for end-of-year reporting, whether it's for personal, business, or even SMSF use. Independent Reserve has integrated all these product lines because they always place customers at the center of everything they do. To sign up for a free Independent Reserve account today, simply follow the link in the description. So welcome back, guys. Hopefully you noticed that sponsorship compared to yesterday was a lot shorter. I listened to the comments. Someone said it was a bit too long, so I cut that down by about a minute. But guys, seriously, a big thanks to Independent Reserve for sponsoring this channel. I've actually used Independent Reserve for over 2 years now. I have my self-managed super fund with them. I have my company with them, and I have a personal account with them as well. The process of using that exchange has been flawless since day one, and I do highly recommend it. It is an amazing exchange. So into the meat of the article today, guys, reading on from the beginning here. The use of Bitcoin causes around 22 megatons of CO2 emissions annually, comparable to the total emissions of cities such as Hamburg or Las Vegas. That is a conclusion of the most detailed analysis to date of the cryptocurrency's carbon footprint. For their study, an interdisciplinary team of researchers at the Technical University of Munich analysed such data as the IPO filings of hardware manufacturers and the IP addresses of Bitcoin. So that tells you straight away these guys have really gone into a lot of detail in order to get as granular as they could in this study. I mean, this would have been an absolute ton of work. Reading on. Although Bitcoin is a virtual currency, the energy consumption associated with its use is very real. For a Bitcoin transfer to be executed and validated, a mathematical puzzle must be solved by an arbitrary computer in the global Bitcoin network. The network, which anyone can join, rewards the puzzle solvers in Bitcoin. Well, yeah, that shows a bit of a lack of understanding from the writers of this article around how Bitcoin actually works, but I digress. The computing capacity used in this process, known as Bitcoin mining, has increased rapidly in recent years. Statistics show that it's quadrupled in 2018 alone. Consequently, the Bitcoin boom raises the question of whether the cryptocurrency is posing an additional burden on the climate. Several studies have attempted to quantify the CO2 emissions caused by Bitcoin mining. These studies are based on a number of approximations, however, says Christian Stoll, who conducts research at the Technical University of Munich and the Massachusetts Institute of Technology, MIT. That's a very leading university in the world in relation to STEM. detective work to track down the power consumption. A team of management sciences and informatics researchers at TUM has carried out the most detailed calculation of the carbon footprint of the Bitcoin system to date. Working like detectives, they proceeded step by step to gather conclusive data. The team began by calculating the power consumption of the network. This depends primarily on the hardware used for Bitcoin mining. Today, special systems are used, known as ASIC, which is Application-Specific Integrated Circuits, based miners, says Stoll. In 2018, the three manufacturers who controlled the ASIC miner market planned IPOs. The team used the mandatory IPO filings to calculate the market shares of the company's respective products. The study also had to consider whether the mining was being done by someone running just one miner at home or in one of the large-scale farms set up in recent years by professional operators. In those operations, extra energy is needed just for the cooling of the data center, says Stoll, and that is true. To investigate the orders of magnitude involved, the team used statistics released by a public pool of different miners showing the computing power of its members. 68% of computing power located in Asia. The researchers determined the annual electricity consumption by Bitcoin as of November 2018 to be about 46 terawatt hours. And how much CO2 is emitted when this energy is generated? Here too, the research team wanted to go beyond mere estimates. The key question, therefore, where are the miners located? Once again, live tracking data from the mining pools provided the decisive information. In these groups, miners combine their computing power in order to get a quicker turn in the reward for solving puzzles, similar to people in lottery pools, says Stoll. The IP addresses in the statistics published by the two pools showed that miners tend to join pools in or near their home countries. Based on these data, the team was able to localize 68% of the Bitcoin network computing power in Asian countries, 17% in European countries, and 15% in North America. The researchers cross-checked this conclusion against the results of another method by localizing the IP addresses of individual miners using an Internet of Things search engine. They then combined their results with statistics on the carbon intensity of power generation in the various countries, linking large-scale mining operations to renewable energy production. The conclusion of the study, the Bitcoin system has a carbon footprint of between 22 and 22.9 megatons per year that is comparable to the footprint of such cities as Hamburg, Vienna, or Las Vegas. Naturally, there are bigger factors contributing to climate change. However, the carbon footprint is big enough to make it worth discussing the possibility of regulating cryptocurrency mining in regions where power generation is especially carbon intensive, says Christian Stoll. To improve the ecological balance, one possibility might be to link more mining farms to additional renewable generating capacity. Well, that's exactly what's happening. So the free market around Bitcoin, the free market in relation to how expensive it is to mine, is what has brought the energy consumption to renewable sources, because miners are incentivized economically to find the cheapest regions of power. That's what we want. We shouldn't be regulating mining. The only thing regulators should be doing in relation to Bitcoin mining is encouraging miners to come to their countries by providing short-term subsidies, maybe 2 to 5 years, that give them cheaper power or give them tax benefits in order to mine Bitcoin. You bring the technology, you bring the people, and you bring the business. That's what they should be doing. This is an incredible emerging technology. Another thing governments should do is run trials where not only do they give subsidies to miners to come and mine in the countries, but they also have technology transfer so governments can start learning how mining actually works. Because hey, one day governments are going to be mining Bitcoin for their treasuries. That is what is going to happen. What better way to have a win-win situation where you incentivize miners to come to your country, and at the same time you have a technology transfer so the government can learn what it needs to do to start setting up its own mining operations. I mean, here in Australia we have organizations like what's that one based out of Canberra? I can't remember it. It'll come to me. But anyway, we have governmental departments for emerging technologies to run trial projects. So, it's a real win-win, guys. But anyway, let's move on and check out exactly how much carbon this really is, right? So 22 megatons. Remember that, 22 megatons. So over here we have a list. This study was done in 2015. A list of the top countries' share of CO2 emissions per year. So this 22 megatons was also per year. So we have the same We have the same unit there from which to compare, and we have the countries ranked from 1 to 20 in terms of the total carbon emissions. Now, the United States puts out 4,997 million metric tons, same as megatons, of CO2 per year. 22, 5,000. Now, what is that in terms of percentages? Well, Bitcoin is putting out around half of 1% of what the US does per year just with its vehicles. Okay, so that puts it into perspective about how green Bitcoin actually is. Now, when we compare that to Australia, that has much less carbon emissions because we just have less people. We have 380 million tons of CO2 per year. It works out to be around 4%. So, I mean, when you're talking like things to attack in terms of this whole climate push, I mean, Bitcoin is the last thing these people should be attacking. If anything, they should be going for vehicles or, other things like that. I mean, Bitcoin is extremely green, comparable to what cars are producing. Now, this last article I want to have a look at, this was actually back in November 30, but it's still really interesting. Title of the article here, and this one's from the block, by the way. Title of the article here, CoinShares report renewable energy accounts for 77.6% of total Bitcoin's energy usage. Think about that for a second. Bitcoin's energy consumption is 77.6% renewable. That is incredible. That is unbelievable considering the billions of dollars this network is keeping afloat. Absolutely unbelievable. So reading through the quick take here. CoinShares released a 19-page report analysing the geographic distribution, composition, efficiency, electricity consumption, and electricity sources of the Bitcoin mining network. The firm notes that Bitcoin miners are likely mining at a loss. That was back in November, remember? So we've had over 100% ROI since the start of the year. But given the right conditions, some mining operations can still be profitable. CoinShares concludes that based on its estimates, renewable energy accounts for 77.6% of total Bitcoin mining energy usage. Wow. So we're just going to read through a couple of paragraphs here, guys. We're not going to get into this one in detail. CoinShares, the crypto asset investment and research firm, released a 19-page report titled The Bitcoin Mining Network: Trends, Marginal Creation Cost, Electricity Consumption, and Sources. The report analyzes the geographic distribution, composition, efficiency, electricity consumption, and sources of the Bitcoin mining network. Additionally, the white paper examines trends in hash rate, marginal creation cost, hardware costs, and hardware efficiency. The report is the second edition of CoinShares' biannual mining report. CoinShares starts off the report by noting that in the second half of 2018, several next-generation mining units were introduced onto the market. These mining units saw significant improvements in both gigahash per joules, efficiency, and investment costs per terahash per second. On average, the efficiency of hardware introduced since CoinShares' last report has fallen along the previously identified trendline, while the cost of the hardware has fallen below the previous trendline and the network's hash rate has grown faster than the 2-year average, but slower than the all-time average. CoinShares goes on to model out the cost of creating Bitcoin, concluding that at prices of around 4,000 US per Bitcoin, the average miner is either operating at a loss and unable to recover capital expenditure, or paying less for mining gear than the firm's estimate. However, CoinShares notes that given the right conditions, miners can still profitably mine Bitcoin. Now, remembering though that that's under the assumption that these miners are liquidating Bitcoin in order to fund operations. What I think some miners would be doing is doing capital raises in fiat dollars from investors for a share of the equity in the companies that they set them up, and then holding the Bitcoin in their treasuries and waiting for the market to appreciate, selling it when they're at a nice healthy bonus. So let's say they were mining for the 6 months leading up to December 2018. They decided to take investment in return for equity of their companies. They held the Bitcoin in the treasury. They waited till April, May this year to sell their Bitcoin. They've made 100 to 140% ROI on the Bitcoin they've held. They sell the Bitcoin. They either issue a dividend to their investors as a result, or they might even buy their stock back at a premium. I mean, who knows? There are so many different ways they could do this, but that is the way I think, in my mind, miners that want to play the long game in mining Bitcoin would play it. Is they would essentially, they wouldn't liquidate their Bitcoin at a loss. They would hold it and wait for the right time to do so, so they're actually selling at a profit, or at least at minimum at cost. But anyway, I digress. So one last paragraph here, guys, before we finish up. So next, CoinShares took a look at the geographic locations of the Bitcoin mining industry. According to CoinShares, miners are leaving China in significant numbers. This is an important one to understand because you still do see some of the rhetoric around people saying that Bitcoin mining is centralized in China. Well, the data says the opposite, and instead is setting up operation in Scandinavia, Russia, Canada, and the United States, where cheap, abundant electricity, friendly regulation, fast internet connections, and cooler climates can be attained. CoinShares estimates that no more than 60% of miners currently remain in China. Of these miners, an estimated 80% have set up operations in Sichuan, with the remaining spread out in Yunnan, Guizhou, Tibet, I'm so bad with pronouncing these Chinese cities, Western Inner Mongolia, and Heilongjiang. In addition, CoinShares notes that while there is mining activity outside of these regions, the firm does not believe they are large enough to warrant detailed investigation. So guys, there you have it. That's these reports of Bitcoin. Bitcoin is far greener than you think. It's an incredible system that is self-incentivized for people to seek out the cheapest form of electricity. In many cases, that is renewable energy, because a lot of these massive solar farms, wind farms, hydro farms have got excess electricity. So the miners will look to try and establish their mining farms as close to the point of supply as possible, whether that's in shipping containers. I've seen that before. I thought that was a pretty smart idea. Modular shipping containers that they can move around quite easily, or in warehouses close to the source, and then they buy the cheap electricity at a discount directly from the generator. So, this system is self-incentivized to do so. It's really, really smart. Bitcoin is smart from top to bottom. Anyway, guys, it's really interesting. So if you liked the video, guys, the likes always really appreciated. Leave me a comment, tell me what you thought. If you haven't subscribed, make sure to hit subscribe, press a little bell button so you're notified of future content, which is coming out just about every day now. I'm pushing hard to do that, guys. Just want to say thanks for watching. I appreciate your time. I hope you have a fantastic weekend. My name's Bo. I'll catch you in the next one. Cheers, guys.